expecting to see the most pain? Let's start there.
Yeah, so I am a bit more cautious on consumer-centric companies. I think there's a lot of worry that consumers or companies who are a bit more adverse and more consumer focused are going to bear a bit more of the pain here. I'm not quite sure how much we're going to see in this particular quarter's earnings of absolute pain. I think as we see where they might be guiding and seeing some cutbacks, I think some of the companies like Snapchat, Facebook, Twitter, et cetera, that have advertising focused businesses and really companies that are trying to go to consumers through those channels. If we see them start to cut back, that again, I think will be very telling about how much pain we might expect. But yeah, I think those that are over indexed or most subject to a weakening consumer market are the ones that I'm a bit more worried about. I think on the enterprise side and the infrastructure side, we're not seeing that business is cut back to the same degree or spending go down in infrastructure. But that consumer segment, I think, is really where there's both questions. And if we do see a little bit more of a recession, I think it's going to be more on the consumer facing side than the industry at large.
Well, let's start on social media since you went there. You've been tweeting about the value of the interest graph, which is something that TikTok seems to do very well versus the social graph. At the same time, you've got all of this background noise happening with Twitter. And I wonder if that's, continues to be a story contained in itself, or if that story can be contagious or contaminate some of the other social media stories we're following.
Yeah, I mean, the thing that's interesting about the engagement side, so consumer engagement with social media is going to continue to go up and remain strong, right? Whether or not brands feel like consumer appetite is there for some of their products, if consumers have to cut back on disposable income, I'm not sure it really hits things like maybe PCs or smartphones, although I think that gets hit, but not as much as things that are more luxury type products or things that they can cut out of their life if they need that disposable income back, again, because of inflation, or perhaps because we have issues with the job market that I think we're still is uncertain around. So I think the engagement stays, but again, that's a metric in terms of consumer engaging with these media platforms. If ad spend's cut back, not it affects their revenue. So the consumers will still be there. How they dispose of that income to spend on things that they either really need or want coming into this holiday season, which is really where you'll see these advertisers use those channels, is going to be the big question. So I think, as Ed pointed out in the segment prior, where they guide, what they start to think about the next few quarters from these CEOs, I think will be very, very telling, because I don't think we'll see the full pain right now, but I think we're eking toward a bit more pain in the consumer side. And that's at least where I think more of the thesis needs to get built out.
I want to ask you about chips. I recently had the CEO of IBM on, Arvind Krishna. He said he was feeling optimistic about the economy and corporate spending, but what he feels pessimistic about is supply and chip semi issues. Take a quick listen to what he had to say.
I actually may be a bit more pessimistic on that than optimistic.
Okay.
I think supply chain resilience is a real fundamental issue that's going to go on for a couple more years.
We're going to see a raft of semi results. What are you expecting there?
Yeah, this is something we could talk a long time. This is a deep web of complex problems. But I think absolutely. And even if you look at some of the commentary that's come out of TSMC over the last few days, noting that they feel a lot of their customers have a glut of inventory is going to cause them to cut back a little bit on manufacturing and even in some of their investments going forward, because most of their customers are sitting on inventory that they need to go and make products. So the hard part with that is it's going to look like manufacturing companies like TSMC and even the likes of Intel and Qualcomm and AMD might have less than stellar quarters, but that's not really indicative of demand. It's more indicative of their customers cutting back orders because they're sitting on so much inventory. So it's kind of, is this really an issue, or how much is this disguised on the fact that they over-ordered because of the supply chain issues, knowing that they were going to have a hard time getting chips. And so by sitting on all that inventory, we're going to need that to ease into the market before orders can get placed up again. So there's a balancing act that I think most of particularly the semiconductor companies, are going to have to navigate while they either try to fill orders and help their customers then get through the inventory that they're sitting on so that their orders can come back again, hoping that demand stays high for their products across the board.